welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, not looking very good after yesterday's stellar move. The markets have actually seen a wild swing with the Sensex, seeing a gyrating move of 1,300 points. Right now down nearly 1,000 points. On the Nifty as well, there's a 0.7% decline. We are now closer to 24,800 odd mark. There's a 181 point of a decline and you can actually see it's the India Wix that is soaring. I think in trade today it's up by about 3.5 odd percent. 18.6 odd levels can be seen. In just 1 week alone we've seen an 8% uptick on this one, and that's what's causing all the volatility right now. Among the sectors, real estate, PSU banks, mid-cap, small caps and pharma are the only sectors that are holding up in trade today. The rest of the pockets have all slipped, with large cuts being seen on FMCG, on IT, on auto, on oil and gas and on metals index as well. Even if you look at the private banks, they are also seeing some cuts at this point in time. Top mover on the Nifty right now is Jio Financial Services. Of course, after that approval coming in from SEBI, the joint venture of Jio Financial Services and BlackRock together have got the permission to start their mutual fund business in India. Remember, they had applied for it last year and finally they have the approvals in place. So in the coming months, you could actually see official launch of the mutual fund business in India and specific products by Jio Financial and BlackRock JV as well. Indusind Bank is also hovering higher by 2.7%. You have Trent, Nestle as some of the other stocks that are holding up. You're also looking at Sun Pharma, Dr. Reddy's, BEL as some other stocks that are holding up in trade. Whereas on the downside, it's UltraTech Cement that continues to reel under some pressure. Tata Motors, JSW Steel, Axis Bank, ITC, these are the other top losers at this point in time. Let's welcome our guest on board. We are joined by Mr. Chokkalingam, Mr. G Chokkalingam. He's the founder and MD of Equinomics Research and he joins in on the program with us. Warm welcome to you, sir, and thank you so much for taking the time out. Mr. Chokkalingam, the last time that we spoke, you were actually pretty confident saying that, we are largely done and dusted with all the consolidative moves that we had been seeing in the markets and the pressure points as well. And you were confident that within the next 1 or 2 months, we will be able to actually see the markets looking at 26,000 or at least inching closer to that. We've already seen 25,000 as of yesterday, sir. What's the sense that now you have on the market, sir?
Yes. Thank you for the opportunity. My strong belief is that this trend would continue. Yes, a lot of people are confused today. Why sudden, even 1.2% the market fell today. Let us understand the fact that, from April 7th, the Sensex has recovered 12%. About 50 days time period, benchmark index rising 12% is something really phenomenal. If you look at last 3-4 decades, the average annual return from Sensex and Nifty would center around 15%. So there has been a phenomenal gain in the last 50 days, of course, from the lower bottom. But that obviously leads to some sort of profit booking. But otherwise, fundamentally, there is no doubt at all. In fact, I have been saying for several months that India is better positioned to manage that trade war. Now, one of the most famous global financial institutions also said the same thing. So that is going to help Indian economy and markets. And apart from that, GDP growth, all the forecasts are above 6%. I have not come across anybody forecasting GDP growth below 6%. So that's again going to be the fastest in the world. So apart from this GDP growth, you have forex reserves near all-time high, and Reserve Bank of India transferring more than 2.5 trillion rupees is another big positive development. It can help Indian government to improve the fiscal conditions, and it's already due. In my firm view, the re-rating of Indian economy by the global agencies are already due. It can happen within next 1 year also, thanks to consistent improvement in the fiscal prudence. And then, a lot more things are happening like monsoon, food grain production, summer crop area going up, inflation rate at record low levels. So all these augur well for sustained recovery in the market. I remain extremely optimistic in the short term.
Okay, optimistic in the short term as well. But what do you think are the factors behind today's 1,000 point sell-off in the Sensex today? Do you think it's only because we are inching closer to the expiry? Are there other reasons globally that are impacting this kind of volatility?
Yes, as I said, it is a cause of concern, but nothing to worry much. You would see again market recovering, within a day or two, or normally I don't give forecast, but this is happening. One day fall, one day rise, recovery.
Yeah.
Because that is backed by strong fundamentals. That's why the sudden recovery also happens. Now, yes, there may not be a solid rise in the Sensex and Nifty even after today's fall. It's 11% upside in the last 50 days. So it may rise 3 to 5%, but a lot of upside can happen in the broader market. Even today, if you see the small caps, number of small caps advancing is much more.
Yeah.
The broad market is relatively strong. That is because even now, the many sectors in the Sensex and Nifty, they are still struggling from this single-digit growth syndrome. So therefore, opportunity for recovery is also limited. It would recover maybe maximum 3 to 5% in 1 quarter or so, or 2 quarter, but plenty of opportunities are there in the broader market. There are over 4,000 stocks in the small and mid cap, where you have got a lot of growth opportunities, deep value opportunities. There's a lot of companies sitting on a very good investments which are not unlocked. There are possibilities of merger and acquisition stories, consolidation stories. So therefore, I strongly believe that FY26 is meant for small and mid cap, and it is going to be stock specific, and that trend would continue in the short term as well.
Okay, got that. Mr. Chokkalingam, help us understand with your view on the overall earnings. Could you sum up the earnings season for us, Q4, as it has panned out for us thus far? We're in absolutely the last leg. Large part of the earnings are done and dusted. So what has been the key highlight for you in this quarterly earnings, sir?
Mostly public sector banks. That is a topmost insight one can draw from the result season. Unfortunately, the PSU banks are not rallying the way it should have been. If you look at net NPA, because I have been tracking this net NPA of the listed banks from 1992, it's a marvelous. There are majority of the PSU banks are having outstanding net NPA less than 1%. We have not seen in the last 2 3 decades. Uh, Tremendous improvement in the quality of assets, and they are maintaining the CASA deposit ratio quite intact as compared
Yes.
to private sector banks. The bottom line performance also better than the private sector banks. So this is a one solid insight one can draw, and many of these stocks are trading around one time adjusted book value, price to adjusted book value. So this is one area where one can see a lot of opportunities. So apart from that, I don't see anything tremendous, insight from the results. We have seen, continued poor profit growth in the FMCG, and of course, cement has been exception. Some of the large cement companies have done quite well, despite slowdown in some of the sectors, core sector growth. The cement companies have done well. So these are the two things I could observe from the earnings season.
Okay, got that. I also, since we're talking about banks, I want to also bring in the financial services space. Today, there's been this news that Jio and BlackRock together, their JV AMC has got the approval for starting their mutual fund business in India from SEBI. This was awaited, and finally the approvals are in place. So probably in the months to follow, we could see some announcements of the products that they're launching in. How are you looking at this opportunity for investors, and on Jio, how will your fresh approach be? The stock is up by 3% today, sir.
So I saw that news. In fact, we have a buy recommendation on Geo, and ever since it was listed, we have been covering the stock, and this is one of the most high conviction stocks in our research coverage. For a couple of reasons. One, in terms of fundamentals, if I include the value of Reliance shares the company holds as part of net worth, even now it is trading at around 1.6 times price to book value. We have seen many NBFCs trading at even 3 to 5 times. So coming from Reliance Group, I am a bit surprised that it is still trading at around less than 2 times price to book value. It deserves at least 2.5 to 3 times in the short term itself, because Reliance Group has already shown its capability in building a size in the mobile, also in the retail. And today, if you see some of the media reports on Geo Star, it's a phenomenal. The OTT platform is now the second largest in the world. I am very confident that it will become number one. So the point I am trying to tell you is that in various verticals they have entered and they became aggressive. They were able to build a size. They were able to build a leadership. Attributes. So that would happen in Jio Finance also. And I am surprised that market is rewarding for the license because I was pretty confident that with the credential, Jio would definitely get most of these clearances. And I think this is only a beginning. The company, we have tracked the investor conference calls and all the results, everything. So it looks like the platform is ready now by Jio Finance across various segments of financial services. So I believe that in the next 2 to 3 years, Jio Finance would emerge as a conglomerate within the financial services industry. And I think it will be a great opportunity for long-term investors who can, invest and wait like in Reliance industry for 3 to 5 years or 3 to 10 years. It can create a phenomenal wealth. That's my strong faith. Personally, I do not own, but we have recommended. We are very aggressive on these stocks.
Okay, got that. Before I go ahead and talk about some of the key sectors and stocks that I want your view on, I also wanted to discuss the primary market with you. The buzz has started off again. We have Borana that got listed today. Bellrise is expected tomorrow. Now, I also wanted to see that there are 3 IPOs that are further open today, as in they opened yesterday and they're currently active. There is Leela, that's Clos Bangalore. Then there is Aegis Vopak. Then there is also ProStam. We also have 1 or 2 more that are coming in by the end of this month itself. So there's a lot of action that's picked up in pace. Have you looked at any of these newer IPOs or new listings that are coming in? Anyone that gives you a confidence that one should look at, sir?
For quite some time, I stopped doing research on IPOs, because it became futile. It became useless. You have to accept it because you do research, you find out that it is extraordinarily valued and exorbitant premium to the listed peer, but then you go wrong. So I was not doing any research because 9 out of 10 were listing at a very big premium also, even on the supposed to be very overvalued stock. So my point is that yes, one can participate, but 2 things you should see on listing. If you are getting a substantial gain, use that opportunity. And second, look at the peer valuation. Even 5 to 10% premium over the listed peer is fine, but don't ever give 30% or 100% premium to the
Okay.
listed peers. That is the only takeaway I can present here.
Okay, fair point. Got that in focus. Now let's look at some of the pockets that warrant our attention, sir. The first one is defense and railways. These pockets that have again started to buzz. Are you looking at a fresh any bites, any stocks from here?
No, not really, because basically more on public domain, I want to be very cautious. So, I don't want, if people don't make money, no problem, but I don't want people to lose money because of my suggestion. That's why I follow a lot of conservative approach, but that is also a problem at times. People miss the opportunity, but still, I would like to follow the same methodology. Now, after the recent rally, I do not find valuation comfort in majority of the defense and railway stocks.
Okay, got that. At least we have that view clear. Let's look at the other pockets, sir. What about the large caps, IT and private sector banks as well? Most of them are hovering in fresh highs within the large cap banking space. IT, although, has been under pressure yet again because there is continued global uncertainty with the way of how US is operating with its policies. How are you looking at tapping these 2 opportunities right now?
Yeah, very interesting question. If you look at the large IT stocks, now we have a global uncertainty in terms of trade war, geopolitics. But the problem is, even without these developments in the last 3 to 5 years or 3 to 4 years, large IT stocks companies are growing their dollar revenue exports in a poor single digit. So there is no change in it. So this is what I have been maintaining for last 3 4 years, that the wealth creation opportunity in the large cap IT stock is over. At least for short to medium term, at least for 1 to 2 years, you are not going to get fabulous return from the large IT stocks. However, in the small and mid-sized IT stock, there could be an opportunity because the similar thing happened in 2014 to 2019. Large IT stocks were struggling for a strong double-digit growth, and then you saw the M&A activities and the consolidation activities starting from Patni Computer to Qualaris to so many Mindtree, so many companies were taken over. even through M&O, my M&A, you saw emphasis also being taken over. So I believe that now once again it is a time for some of these consolidation and merger and acquisitions within the IT space. Because another important trend element is that the buyback has come to a standstill because of the higher tax. A lot of large IT stocks which were doing almost every year or once in 18 months buyback, now they stopped. So a lot of cash is still lying with this company. So therefore, there is a theoretical possibility of this merger and acquisition getting once again some action, momentum. And therefore, one should consider, small and mid-sized IT companies. The benchmark could be, around 2023, 24 PE, and the enterprise value to annual IT revenue should be, around 2 times or less than 2 times. So based on that, we have been recommending very strongly Scient Limited. I personally do not hold, and I am having very extreme, optimistic outlook on the stock. It's the cheapest mid-sized IT company. Not only that, it has got three verticals on a consolidated basis. One is IT services. Second, it has got the engineering business through Scient DLM. Then it has floated 100% subsidiary for semiconductors. So therefore, this stock, gives you a lot of confidence, because of the diversification, and also the stock is down 38% from 52-week high. That also adds a lot of comfort because ultimately the valuation is also a function of the price. So this is my approach. Instead of private banks, I would recommend the public sector banks because of the heavy branch network. The public sector banks are able to keep the CASA deposit intact. So when there is a
Yeah.
market pressure and pressure on deposit growth, the branch network is helping them. So I would continue to reiterate my conviction in stocks like Bank of Maharashtra, Canara Bank, and SBI. Maybe for defensive purpose, one can continue to buy or hold HDFC Bank.
Okay. Let's also look at domestic cues, sir. We are looking at early monsoons onset as well in Kerala. At least 2 to 3 weeks earlier is what we've seen monsoon, arriving. Nobody complains because of early rains because it does give us respite from the, extreme heat conditions, at least in the north part of the country as well. How would you really look at this as an opportunity as a retail investor?
As a student of economics, I just want to share my learning that, I am not saying that agriculture sector is not relevant or not important, but there is been a structural change in the Indian economy over the last 4 5 decades. So today the agriculture sector accounts for 17 18% of the GDP. Out of that, if you ignore allied sectors within the agriculture sector, allied sectors like a forest and fishery, which are not affected by the monsoon, the pure agriculture sector is only 12 13%. After that, also you have irrigated land. So the point I am trying to say is that India has become a so robust economy, it can live with the failure of monsoon also. Yes, successful monsoon is good from many aspects, no doubt. But this is the point I wanted to communicate that it doesn't deserve too much of emphasis in the current economic condition. However, it is positive because it can again pull down the inflation rate further. It can improve the rural demand through lifting the rural income. So therefore, almost for last 3 years we have a good monsoon. And the last year, the southwest monsoon, northeast monsoon, both were successful. And apart from that, the summer crop also up, despite the heat, the summer crop is up in a strong, volume growth. So all augur well. This is another reason for me being very optimistic on the Indian market in the short term itself.
Okay. Let me ask you about few more pockets. Pharma space is something that I wanted to discuss. We are again seeing some upticks across the board. From the diagnostic space, it is Divis Laboratories that is again garnering traction, fresh highs now that we are looking at. Even some mid-cap pharma names that are pulling up in place. We had Oro Pharma's results as well. What exactly appeals to you when we talk about pharma, healthcare as a pack? Do you again see some renewed sense of activity emerging here, and is this also offering an opportunity to enter?
I would wait for export-oriented pharmaceutical company, particularly to US. Of course, the US president has been changing his stance on the tariff war, tariff rates, but still, it is better to get a clarity on what exactly is going to impose finally for Indian exports. It may not be aggressive, definitely because of the talk between the officials, but at the end of the day, The US is suffering a lot. Its trade deficit is now around $1 trillion. At this rate, if US doesn't take measures, US will be in deep economic crisis in 5 to 8 years or 8 to 10 years. So ultimately, even if aggression in trade war melts down, moderates, but definitely, ultimately, there will be hike in the import duty across all the major imports against all major exporting countries. So there is no doubt about it. Otherwise, US will be in deep trouble. So which means ultimately even 10% higher duty is very much possible for Indian pharmaceutical products. And already we know for last 1 2 years the realization there is a pressure from the US market. So even if 10% hike is a net to net, that also can cause some difficulty. So therefore, in the short term, my suggestion is to wait for export-oriented, US export-oriented pharma companies and focus on the domestic companies, the domestic pharmaceutical companies, which have a least dependence on the US market. That is my short-term strategy.
Okay, got that. So IT we've discussed, pharma as well. I wanted to also discuss the staples, the FMCG players at large. How did you assess some of those earnings that came in by way of ITC, Marico, Dabur, Nestle? How have you looked at and assessed some of these aspects, sir?
Temporarily, I think we should call this as only consumer good industry. I think we should take a bold decision of not calling it as a FMCG, because last couple of years it is no longer fast moving consumer good. It has become a slow moving consumer goods. Of course, I don't that yes prefix to this, but these consumer goods are continuously rising in volumes in a poor single digit. In fact, one of the stalwarts, the leaders in the industry, he mentioned in the media that it might take another 12 to 18 months for these consumer goods companies to come back to strong double-digit volume growth. I also believe in it, despite last two good monsoon and summer crop going up. That is not able to help the consumer good companies to post strong double digit. So I think the status quo would maintain. Maybe one or two would look better, not sector as a whole. Something like a Britannia, I would bet on, because its major inputs are wheat and palm oil, and there is a very record level of production of wheat and record level of procurement of wheat, and wheat prices are moderated in the domestic market. Even the palm oil prices are moderated. So even if volume growth is in single digit, I believe the profit growth will be substantial for Britannia because of the weakness in the major input prices.
Okay, fair point. Let's also look at the broader index, something that you were also alluding to, sir, earlier, the mid and the small caps. What's your fresh approach here? Is it very stock selective at this point as well, or and do you still believe there is some part of froth that still needs to be taken out?
No, it's not a homogeneous, because you have 4,000 stocks in the small cap. Very interesting. I don't know how many gave, thinking to this. You have a Nifty and Sensex, and they're broadly in line with the major sectors of the economy: automobile, cement, consumer goods, infra, engineering. But if you come down to micro level, small cap and particularly small cap, which has got a universe of 4,000 stocks, it's a hugely heterogeneous. uh, you know, different product, different services, micro level product, major product, diversified product, value added product. So, what I'm trying to tell you is that at any point in time, even when the market was 484 lakh crore, that's above $5 trillion, there were opportunities. So, this 4,000 stock segment always offers opportunity. You can always find out at least 10, 20 fabulous stocks from this, which is not possible to do it in Sensex and Nifty because they are in line with the broad core sectors or broad sectors. So you have a lot of deep value stocks. There are companies which have huge investments. I am holding a Bombay Pharma. Just to give an example, I want investors to know that we have invested in the family company personally. I'm just giving example. The whole market cap of BBDC is around 14,000 to 15,000 crore. It is holding investments in Britannia worth 65,000 crore. So you can't find such deep value stocks in the large cap. So therefore, the point is that there are one side a lot of stocks which are trading at a P multiple of 40, 50 when the profit growth is 10, 20%. That is a space you should avoid. And there is other segment where you find a lot of growth opportunities. P multiples are very, very comfortable compared to year-on-year profit growth. or they have a lot of investments or unlocking potential, or some of them have even the takeover opportunities, merger and acquisition. In fact, I was one of the few analysts who keep talking about this merger and acquisition possibilities in the IT sector from 2014, and many of the stocks which I recommended have gone up. So I don't want to name now, but just to give an example, I am saying that these kind of opportunities are there in the small cap and mid cap space, which is not available in the large cap. And another structural change which has happened is, till 15 years back, the investor base was only 4.5 crore. Today it is around 21 crore. So
Yeah.
out of almost about 15 crore people have entered the market only in the last 6 7 years, and most of these people are retail investors, first time investors and with less experience. They want to make a quick money and they jump into the small cap only. That is why the opportunities are plenty because of wider participation of a new young generation. Sometimes the PE of the stock goes much beyond our expectation, analyst expectation. So that also can create a lot more wealth, above what you expect in the market. So these are the various opportunities, but one should be careful. One should not put everything in small cap. At least 30 to 40% should be in large index stocks for
Sure.
risk mitigation. And one should not chase only single stock, diversified across 15, 18 stocks. And finally, never lose the comfort and the management quality, balance sheet quality, and valuation comfort.
Fair point. Well, always, so good to hear your deep researched insights, sir. And I always appreciate that you come on our channel and, give us that, insight for all our viewers to really understand the best way to approach the markets, looking at all the scenarios that are at play at this point in time. Thank you so much for being with us on the show and guiding our viewers well. We'll see you soon on another edition of Market Today very soon, sir. Thank you so much and hope you have a fantastic time till then.
Thank you.
All right, viewers, 3 minutes to go before we shut shop for the day. So let's get back to the markets and the current trade at this point in time. Looks like 2 days of a winning streak is set to get stalled with the kind of dip that we are seeing in the market. So 0.7% of a fall right now. 24,831 is where we are at this point in time. Remember, yesterday we closed above 25,000 mark, and today you are actually seeing some cuts across the board. Most of the sectors that have pulled down are FMCG, IT, auto, financial services, infrastructure, oil and gas, private banks, metals, consumer durables, whereas PSU banks are the top movers today. Gains coming in, something that Mr. Chokkalingam was definitely throwing his weight behind. He was confident of the space, 0.25% higher. Real estate, mid and small caps, and even some pharma stocks that are holding up. Jio clearly, as he also shared his views on, is the top mover, now nearly 4% up. Indusind Bank, Trent, Sun Pharmaceuticals, these are all the stocks that are actually holding up in trade. Whereas on the downside, like I mentioned, it's the cement basket today, UltraTech Cement, Grasim. You also have Eternal, that's now slipped by 1.5% to 23 odd levels. ITC, JSW Steel, Tata Motors are the top laggards in the trade today. On the F&O space, Supreme Industries moved up 3.6% higher. Jio Financial Services, Titagarh Rail as well, even though Mr. Chokkalingam did say that he is not very confident of the defense and the railway stocks after the kind of move that we have already seen. UltraTech Cement is the top loser in the F&O space. ITC, Interglobe Aviation, after that big block deal that's taken place today. Muthoot Finance are the other key points, spaces which are under pressure. Let's look at Nifty 500. The moves that you're seeing across the board are Burana Weaves, day one, 18% higher. You can actually see a move on Shriram Properties today, 15% up. Then you also have names like Apollo Microsystems, 12% higher. Camlin Fine Sciences, Centum Electronics, that's up by 10%. Venus Remedies, Omax Limited. So real estate is definitely in focus today. Suven Life Sciences is another one. Exicom Telesystems, that's up 10% in trade today. Bayer Crop Sciences, after the earnings, about 10% up. You also have names like ITI Limited. Then you have names like even Yatra Online, that's up in trade. Sikachi Industries is another one that's up by about 8.5%. These are all the stocks that are up anywhere between 8 to 20 odd percent that we have discussed with you in trade. That's the smart move. On the downside, what's not doing well in the Nifty 500, also important to see what's not working well. Rate gain travel, Traxon Technologies, Bajaj Healthcare, Olectra Green Tech down by 6.7%. Talbros Auto, Brain Bees, that's first cry for you, that's down 6%. Sumitomo Chemicals, you also have names like Blue Dart. Praxis Home Retail is down by 5%. Sagility, these are all the stocks that are actually under pressure at this point in time. Let's look at the Nifty next 15 names. Anything interesting here? Zydus Life Sciences, HAL, half odd percent higher in trade. TVS Motor, that's also up. You have Adani Energy Solutions, Bosch, Havells, these are all the stocks that are opening up. In fact, it's the Adani stocks that are holding up. Adani Green Energy, Adani Energy Solutions, they are the ones that are holding up. Even Adani Enterprises was among the top movers in trade in the morning session. Right now, we are at 330 and 24,837 is the closing level of the Nifty right now. 163 is what you're seeing at this point. In slight adjustment now, 24,826, 174 points of a decline on the Nifty. All right, we shut shop on a lower note today, but we still have a day before we get into the expiry session. Let's see how things progress from here. But May so far has panned out much better than how we've seen some of the couple of previous months and series. Let's see whether the momentum is carried on. So far, Mr. Chokkalingam did mention that in the short term itself, he's pretty positive on the trend, which could be on an uptrend as well. With that, we wrap up on market today, today's edition. Many thanks for watching in, but do stay tuned. Even beyond the stock market hours, the coverage will continue from the world of business and economics.
The ongoing changes create the opening for a global euro moment.